Every 3 months, we get to look at what some of the super investors, although the term super investors can be debated, we get to look at their moves, their buying and selling activity. Now, of course, those are lagging indicator or lagging data because, well, it happened in the past quarter. Probably they've been buying and selling more in the last couple of weeks as well. So yeah, that data, do with that what you want. Plus, we don't really get an explanation as to why they bought or why they sold unless they went on TV or wrote on X, for example. Now, before jumping into all of those portfolio moves, this was basically the market on Thursday. It was flat-ish. I would say finance, health technology were green. Some tech were flat, green-ish. Of course, the Dow Jones down even more because of United Health Group. That was down another 10 to 11% or so. I did a specific video about that stock. If you're interested in that, that will be in the top right corner. And if you like these types of videos, hit the like button, subscribe as well. If you're new here, would really help me out. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so first up, we'll start with the smallest portfolio of them all, but one that still gets quite a lot of attention because of, well, a one-time good move and a Hollywood movie, and that's Michael Burry. Now, clearly you can see what has happened in Q1. He sold everything, literally, he sold everything and bought Estee Lauder. So yes, right now, he only has one stock in the portfolio, and that's Estee Lauder. He sold completely out of Alibaba, Baidu, JD, Molina, Pinduoduo, HCA Healthcare, Bruker, etc., Oscar Health. All of that is gone, which now means that his portfolio, which is the smallest one by far, $13.2 million, is just Estee Lauder. Make it make sense, right? You sell all the other, which in my opinion were good businesses, to buy makeup. I don't know what the reason behind that is, but okay. Moving on to David Einhorn from Greenlight Capital. This is the first time we cover him, but I think he's a good investor. I think he's a good one to put in this series. So here as well we have I wouldn't call it super investor, but an investor that, again, buys a lot and sells a lot as well, or adds and reduces a lot. He did sell out of 4 positions: the Invesco S&P 500 equal weight, SPDR S&P retail ETF, basically ETFs, and then Invesco Optimum Yield drivers. The other reductions were, notable name here is Peloton, believe it or not. We got here CNC, Centene Corp, reduced their 37%. The rest, not that interesting. He did buy Dollar Tree. That's a completely new position in the portfolio, though not that big at all. And then he added to, well, a lot of his existing positions. Now, if we go and look at the portfolio, 33 stocks, portfolio value of just under $2 billion. With the number one position of the portfolio being close to 28% of it, Green Brick Partners. Then we've got 8.6% Core Natural Resources, Bright House Financial at 8.2%, Kyndryl Holdings 6.5%. So a lot of, in my eyes, well, for me, unknown names, to be honest. And we can look at the mix here. Financials makes up 36.19%, then energy 15.39%, services 11.7%, healthcare 8.35%, technology 7.12%, industrial goods 5%, etc., etc. You can see this right here. What was this headline here? David Einhorn says, we have reached the fartcoin stage of the market cycle, and that was, well, end of January 2025. So he wasn't that wrong. Moving on to the next one, that's Chuck Akre from Akre Capital Management. So here as well, we've got more reductions than buys. So the biggest reduction here is Digital Bridge Group, then CarMax, American Tower, Moody's, KKR & Co., Verisk Analytics, MasterCard's a reduction of 10%, O'Reilly Automotive 3.5%, Visa close to 3% as well. So I did reduce again Visa and MasterCard because I believe, yeah, MasterCard in Q4, he did the same thing with Moody's. Then if we look at what he added, so he added a little bit more in Brookfield Corp, which he also did back in Q4, not that much, which again, strange move, right? Why change in portfolio 0.06%. Okay, then we've got Airbnb. He added 10%, although a small position, he did add an extra 10%. And then CCC Intelligent Solutions Holding, he added 23.49%. And here you can see that the portfolio has 18 stocks with a portfolio value of over $10.4 billion. Here, MasterCard, O'Reilly Automotive, Moody's, Visa make up the top 4 of the portfolio at over 10%, and actually MasterCard over 17% of the portfolio. Then we've got KKR, Brookfield, Roper Technologies, and all the rest, with Airbnb already 3.35% here of the portfolio. So yeah, the mix here is pretty simple. Financials making up close to 38%, then services another 28.29% of the portfolio. So yeah, some reductions. I think this is the theme, right? A lot of reductions, a lot of profit taking, especially since, remember, this is Q1. So, I mean, since April until now, I would assume that 3 months from now, we're going to see quite a lot of buying. That's just my guess. We'll have to wait 3 months to find out, well, what they actually did. But right now, I think the team here is pretty clear. They've been taking profits. They've been closing out some positions. And yes, added here and there to some quality names. Moving on to one that likes to buy a lot and likes to sell a lot each and every quarter, and that's Daniel Loeb from Third Point. So as you can see right here, I will just scroll down very slowly because yeah, the list is very, very long, buys and quite a lot of sells as well. But as you can see, it's been the same in Q4. It's been the same in Q3. It's basically like this every single quarter. So yeah, probably an actively managed fund. So what did they sell out completely? Danaher Corp completely sold out. Meta Platform completely sold out. Ferguson Enterprises out. Tesla, Thermo Fisher, Workday, Cinemark Holdings, Global Blue, and Clear Channel Outdoors completely sold out. Of those, well, the last two here were quite small positions. Reductions in Amazon by 31%, Intercontinental Exchange by 47%, Microsoft by 47.5%, and even the other, I'd say, quality names, Brookfield, reduction of 15%, Vistra, 15% here as well. And, well, he did open up quite a lot of new positions this quarter. Pinterest, Shark Ninja, quality company. I covered this, I think, a couple of months ago. Ritchie Bros, okay, never heard of those. Cool name, I'd say. AT&T, Talon Energy, Casey's General Stores, I would assume. United States Steel Corp, interesting. CoStar Group, NVIDIA, okay. Completely new position in NVIDIA in Q1. Very interesting. Very, very interesting. And then he added to Apollo Management, 275%, which probably means that this might have been a position he bought in Q4. No, I guess not. Okay. He added 121% to Membership Collective Group, 22% to Live Nation, another 15.6% to Discover Financial, and then some other here to those names, which means that if we go and look at his portfolio, 41 stocks, portfolio value of just over $6.28 billion. PG&E still is the number one position in the portfolio, close to 14% of it. Amazon, even with the reduction, is number 2 at 7.11%. Then we got Taiwan Semiconductors. Live Nation is number 4. Very interesting. Telephone and Data Systems, number 5. And then we've got here all the rest. Where did Microsoft fall? I think it has become, quite a small position, 1.88% of the portfolio. Then the newer additions, Pinterest, 0.49, Shark Ninja, 0.73 of the portfolio. So at the top, not much has changed, I'd say. Well, Amazon did get cut by 31.88%, but the number one position here is still PG&E for Third Point. But this is one where every single quarter big changes are made, a lot of buying, a lot of selling. But I'd say the top 4, top 5 rarely moves much. Moving on to David Tepper from Appaloosa Management. Remember David Tepper a year ago, very bullish on China, went on TV, said buy everything China. Well, didn't really buy everything China, turns out. But he was quite bullish on Chinese stocks. He had quite big positions in, well, the Alibabas, the Pinduoduos, Baidus, etc., etc. So what has happened in Q1? As you can see here as well, quite a lot of activity, especially in the reduction department, right? This list goes on and on and on. What did he completely sell out of? AMD, I guess he was tired of Advanced Money Destroyer, FedEx, EQT, Antero, Expand Energy, and Intel. So I guess when you sell AMD, you also have to sell Intel. I guess that's how it works. But then again, he did also reduce quite a lot of Micron, of Lam Research, of ASML, of Qualcomm, of Nvidia. So I guess, yeah, he was sick and tired of semiconductors. It seems that that was the case. But if you look at even the Chinese names, Baidu got cut by close to 50%. Oracle cut by 50%. Microsoft, huge cut there as well. The casinos, Las Vegas Sands and Wynn got cut by 34 and 36%. Lyft also cut by 33%. Pinduoduo, Alibaba, iShares China Large Cap ETF, also a nice little haircut here, which I do believe in Q4 we've had the same trend, right? In Q4, he did also reduce, some tech companies, Lyft. What did he do with the Chinese ones? Okay, he did add a little bit in Q4 to Baidu and the iShares, for example. And this time we've seen some big reductions, I guess, again, taking money off the table, securing profits, lots of uncertainties with tariffs as well in Q1. So that's what happens. Then he did buy. He bought Block. Okay, strange, but fine. Broadcom, which again, I'd love to know the reasoning behind this, right? You sell a lot of semiconductor stocks, but then you open up a completely new position in Broadcom. So yeah, L3Harris and Deutsche Bank are the two other companies. Then where did he add? Uber Technologies, 113% increase in Uber Technologies, 16% increase in Corning. NRG Energy increased by close to 13%. Meta, he increased that by 12.2%. TSMC here as well, he increased it by 8%. Google, although it's this type of Google Alphabet, 6.8% is just with regards to the voting rights. So yeah, interesting. And he did add United Health Group, 0.29%, 500 shares, doesn't really move the needle at all. So the portfolio looks like this: 35 stocks, portfolio value over $5.5 billion. Alibaba, that's the same thing here. Alibaba still comfortably number one, 21.92% of the portfolio. Then we've got Pinduoduo, Amazon, JD, Meta, Google, Vistra, Uber, the Chinese large cap ETF from iShares, and then all the rest here. So yeah, quite a lot of movement, but the top still remains the same. I guess he's still very, very bullish on China and especially Alibaba. By the way, if you missed Alibaba's earnings report review, that will also be in the top right corner. L3Harris is a 1.13% position of the portfolio, with Broadcom being just 0.39% of the portfolio. So quite small. Uber already making up over 4% of the overall portfolio. Up next, we've got Howard Marks from Oaktree Capital Management. Here as well, we've got quite a lot of activity last quarter, some buys, and quite a lot of reductions and selling here. Now, notable names in the selling department, I'd say Pinduoduo, completely sold out. Coupang, completely sold out as well. Infosys, completely sold out. The others, well, we don't really know those companies that well. If you do, well, here are the names. As for the reductions, again, reductions across the board. Profit taking, I would assume, because those are some of the companies where you will see they rank quite high in the portfolio. As for the buying activity, he bought Nokia, and it's already 2.44%, so quite big. Bought Grab Holdings. We talk about that company quite a lot on the channel. Bilibili, another Chinese company. Baidu, so he opened a new position in, I would say, 2 Chinese companies. Where did he add? Well, he added quite a lot here in Barrick Mining Corp, Cemex, Indivior. Again, names I have no idea what these companies do. 53 stocks in the portfolio, a portfolio value of over $4 billion. Same thing here, not much has changed. Torm has been number one of the portfolio for quite a while, and that's the Danish shipping company. Then we've got Expand Energy, Garrett Motion, some other names here. I mean, we have to scroll down. The first, I'd say, notable name is actually Nokia at 2.44% of the portfolio. All the rest, I mean, I have to go down quite a lot. I'd say Vale is here 1.48%. It was a bit higher than that previously. So yeah, the mix in that portfolio, energy is 18.45%. Then you've got industrials, materials, consumer goods, financials, and technology is only 5.73% of the portfolio. I mean, Howard Marks, I highly suggest you go listen to a couple of his, I'd say, speeches, interviews, you want to call it. I even have one on the channel. Very, 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 very interesting. Moving on to Pat Dorsey from Dorsey Asset Management. We're coming towards the end of this episode. So some moves, but way, way less than the last couple of investors that we've looked at. So sold completely out of Smartsheets, and that was a pretty big position actually. Herc Holdings and Upwork as well, as you can see, above 5%. He reduced quite a lot in Wix. PayPal, I guess he was also tired of PayPal. Reduced a little bit, like literally a little bit of Sprout Social, SEMrush, Alphabet, AutoZone, and he did open 3 positions, ASML, Bookings, AirCap Holdings, and he did add to Danaher Corp and Meta Platform. So here as well, I would assume that not much has changed. 11 stocks in the portfolio value actually under $1 billion. Number one, AutoZone at 15.17% of the portfolio. Then we've got Meta, then we've got Danaher, so those 3 make up 45% of the portfolio. AirCap is already at 12.33%, Alphabet 10.58%, Bookings new position 7.8%, ASML a new position just under 5%. And so yeah, PayPal is still at closer to 5.9% of the portfolio. And for those interested, AirCap is an American-Irish aviation leasing company headquarters in Dublin, Ireland, with offices around the world. AirCap is listed on the New York Stock Exchange. So there you have it. And to be honest, I mean, could be very, very interesting company to study. Maybe I'll do a specific video about the stocks that are interesting, but we've never heard or I have never heard of before. So yeah, good companies. He added Bookings and ASML, of course, we know. And AirCap could be something we should be looking into a little bit deeper. Up next, we have Terry Smith from Fundsmith, which have been underperforming actually for a while now. And here we've got, again, a lot of reductions and 2 sells, PepsiCo and IDEX. All the rest here are reductions basically across the board. He did buy 2 new companies, Intuit and Catalyst Pharmaceuticals. He added to Zoetis or Zoetis, however you want to pronounce it. Let me know in the comment section below. Zoetis A, Zoetis B. Let me know. Doximity, Texas Instruments, Qualys, Paycom are the additions of this quarter. Small positions, I'd say. Very, very small positions. So 38 stocks in the portfolio, a portfolio value of just under $22 billion. So as you can see from the top down, I mean, top 15, I'd say only reductions. Meta is still number 1 at over 10%. They've got Microsoft, Stryker, Philip Morris, Visa, ADP or Automatic Data Processing, Waters Corp, IDEX Laboratories, Google. Those are the, let's say, top 10 positions or so. The newest one, Intuit, is at 0.5% of the portfolio, and the other one is at 0.24% of that portfolio. And so he has 25% in healthcare, just over 20% in technology, 18.85% in information technology, and 16.72% in consumer staples. So yeah, although we've seen quite a reductions, as you can see, the reductions were quite low, which again proves the point that I've been making, is that Q1 is where it seems like a lot of them just took a lot of profits, increased cash, and maybe added to solid businesses that were already beaten down. Up next, Warren Buffett, Berkshire Hathaway. The last couple of times that we are going to do this, when Warren Buffett is going to be around Berkshire Hathaway. So what has happened in that quarter? Sold out completely of Citigroup and completely sold out, closed that position of New Holdings, which was a position that they already started to sell off last quarter and 2 quarters ago as well. Didn't really make that much sense. I mean, it was already a very, very small position for them. It's a quality business, so yeah, I don't know. Strange move, but okay. He also reduced in Liberty Media Corp Formula One Series C by close to 50%, T-Mobile by close to 11%, Bank of America 7.15%, Capital One, Davita Health, and Charter Communications, some small reductions. And then the biggest addition here is Pool Corp by 144%, which I assume, is one that they added even more, a little bit more in Q4. And it was a completely new position back in Q3 of 2024, same quarter where they opened up a position in Domino's Pizzas, where they added another 10% this quarter. So 36 positions, portfolio value of over $258.7 billion. Apple still number one at 25.76% of the portfolio. American Express number 2. Then we've got Coca-Cola, Bank of America, Chevron, Occidental Petroleum, and the rest. Again, I'd say nothing much has changed. Although I do wonder when American Express became number 2 in that portfolio. Strange, because I didn't remember it rising up so quickly in the rankings. But okay, interesting. Apple is still over 25%. Remember, the last couple of quarters they did sell quite a lot of Apple shares, right? You see this in Q3, 25% reduction. The other one, a 49% reduction in Apple shares. So that's why it's now 25% and not something closer to, what was it previously? Close to 50% of the portfolio. So yeah, okay, solid. I mean, very solid, very, very solid portfolio. Last but not least, of course, Bill Ackman, Pershing Square Capital Management. And of course, we already know the big one is Uber. Very, very big one because it's the number 1 position in the portfolio. And I wouldn't be surprised if they bought even more in Q2. They actually added to Alphabet, they added to Brookfield and to Hertz Global, which was already known, especially the last couple of weeks. I believe they bought even more. Then they sold completely out of Nike. And Nike was a position that they added back in Q2 2024. Then they added more in Q3, added more in Q4. And now, it is completely gone of that portfolio. And so, hello guys, Future Couch here. So I have to correct myself. Actually, they did sell out of the shares of Nike, but they now have deep in the money call options. This structure allows them to maintain exposure to the upside potential of owning the stock outright while unlocking capital for new investments. The positive intrinsic value of these options and their low break-even price minimizes the likelihood of loss, while the multi-year term provides duration through Nike's turnaround, which they believe will ultimately be successful, but may lead to short-term pain, I assume, in the stock. This is something that they told us a couple of weeks ago. I missed it when I talked, so here is my correction. So yeah, outright shares, that's off the table. Now they've got, options, which to be honest makes sense, but again also tells you that they're not quite confident in the short term, but in the longer term, this gives them the flexibility to maybe have a little bit more patience, which I think they should have done with Netflix. There are 11 stocks in the portfolio, a portfolio worth under $12 billion. Uber, 18.5% of the portfolio. Brookfield, 18% of the portfolio. Of course, Google, we've got here the 2 shares combined, will make up around, I'd say, 14% of the portfolio. So yeah, it did lose the top spot, and Uber is now comfortably number 1. Then we've got restaurant brands, Howard Hughes, which was also a topic of a lot of discussions in the last couple of weeks. I didn't really follow that much. Chipotle restaurants, Canadian Pacific, Kansas City, then Hilton at 5.7, Seaport under 1, same with Hertz Global, but I do think that we're going to see some changes in Q2. Now, yeah, for the Nike shareholders, I guess you're hoping that this is another Netflix scenario because they bought Netflix, stock went down more, and then they sold, and then the stock basically bottomed out. Maybe the same thing would happen with Nike. I don't know. I mean, Netflix to me was just a stupid move. I didn't know why they sold. Nike, I didn't understand why they bought. So yeah, I understand very much why they bought Uber, because I also bought Uber in Q4. So maybe he followed the couch. Maybe he followed the couch investing portfolio. Who knows? But anyways, that's about it. Hopefully you enjoy this type of reviews. If you've seen any specific company, strange ones that we don't know, that you think is interesting and we want me to cover, let me know down in the comment section below. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.